This is Behind the Headlines, with behind-the-scenes analysis on issues affecting Pennsylvanians, sponsored by the Susquehanna Valley Center for Public Policy. Now, here's your host.
Hi, from Philadelphia to Erie and from Pittsburgh to Scranton, it's Behind the Headlines. I'm Charlie Greenawalt, Senior Fellow of the Susquehanna Valley Center for Public Policy. And this edition of our program, we are turning to an Arnold report. And we are fortunate enough to have our president with us, Mr. Ed Arnold, president of Susquehanna Valley Center. Welcome back to give us a new round of information and answer questions from viewers on financial and economic matters, Ed. And again, we remind our viewers to, if they want to tap into your expertise, that they need to send us by email their questions, and we will put them on the air and we'll let Mr. Arnold answer them for you. So please send those in. This month we have quite an array of big questions on the national and international scene, it seems, Ed, but let me start out with a smaller one. One of our viewers wrote in to say that I have recently heard of the availability of purchasing a stock slice, a fraction of a stock, instead of buying a whole unit of stock. What do you think of this investment tool? Will it endure on Wall Street? Do you think it will be accepted?
First of all, fractional share purchasing has always been there. Obviously, as we know, in the stock exchange, you must buy 100 shares. So therefore, somebody else has to buy 100, break it up into pieces of pie. There's a charge for that. So overall, it's a more expensive way to get into equities. If you basically don't want to buy a large amount of some stock, it may be better to consider ETFs. Overall, it's an expensive way to invest.
Okay. Well, we turn from stock slices to the big picture. One of our viewers is asking you, would you please explain to the ordinary investor what happened recently in the national and international banking scenes when Silicon Valley Bank and Signature Bank and First Republic Bank experienced difficulties? How close were we to a full-scale run on banks that could not be controlled?
Okay, well, first of all, just to give you a little history lesson, back in 2008, the Fed tremendously increased the Fed fund rates, and it caused a banking crash. So therefore, that you think our government would have sort of learned that there is consequences to their actions. And in this case, indeed, they were concerned about inflation, but they didn't realize, the Federal Reserve, that by doing this, you are definitely going to cause a tremendous amount of losses in the system. Now, understanding again, in fact, that banks do not have to mark to market. What that means is they have an asset and it loses its value, they do not have to readjust its value because it is assumed, in the case of securities, you will hold them till they are redeemed, their time runs out, or your loans are repaid. So therefore, it would be too complicated for the banks to do that. So therefore, right now, our banks, many, are not in very good shape. Specifically, again, there were warning signs. Again, I'm also going to say that yes, did the Federal Reserve think this thing through? I'm concerned they didn't, because they didn't watch history. But the other thing is our regulators. The regulators, a year and a quarter ago, back at the end of 21, there was an $800 million loss already at SVB because of the value of their portfolio. Because of interest rates. 9 months ago, July of 2020, it was $14.2 billion they were underwater. Again, you don't have to market, but it's a thing. And they had $150 billion of hot money. Hot money means it's not insured by the federal government. The federal government only insures up to $250,000. And therefore that money, that's why they call it hot, it leaves quickly when it doesn't like what it sees. Because as any deposit in your bank, you can take it out at any time. So therefore, the government basically allowed SVB, which was absolutely ridiculous. They had 94% of their deposits were in hot money, which means they could leave quickly. Yet they had 92% of their assets in long-term investments, which they couldn't get out of quickly or with a major loss. This is why there's $14.2 billion. If they'd have sold their portfolio, they'd have lost that money. But they had all hot money. They grew drastically from like 50 billion to 200 billion in a very short time. Also, they were a Biden pet because they loaned money. Their customer base was very heavy green energy. Startup companies that weren't making money, that had a giant lumps of dollars because they would have a semi-offering, a secondary offering of something. They'd have the money, but they're losing money and they're burning, they take it out. So basically, this money is their lifeblood because the company itself is not making money. This is the kind of company, but again, the government probably looked the other way because this is a pet. We want green energy. So whether that's true or not, I'm not sure. There's no question. Another bank, I happened to look it up, it had also a 90% hot money, but it only had 30% long-term investments. So therefore, at least it was somewhat more secure. Unfortunately, our top 1,000 banks have $3.5 trillion of hot money. That's a big time bomb. So basically, is our system, I want to point out something else. Yeltsin, a while back. Yellen, I'm sorry.
Janet Yellen.
Janet Yellen testified before Congress, and in her second day of testimony, she never made the statement, the banking system is in sound condition. Which is, we found rather interesting that she didn't make that statement. You think she would have, she's trying to reassure you how good things are, but she didn't want to say that. And really, just to try to put things in perspective again to history, we're getting away from SVB, but I'm sort of trying to lay the groundwork here, that when the banks got in trouble in 2008, we had on the scene approximately $42 trillion of debt in our system. Today we have $94 trillion of debt in our system. So therefore, this is a tremendously large, the interest now on that debt is now 420 billion, was 420 billion back in 2008. It's now 940 million, the interest. Billion. This is billion. Yeah, we got to jump billions and trillions to get confusing. The assets are in trillions, the interest is in billions. What is also amazing is the fact that the system is, let's say, it appears is not being, the regulators aren't doing the job as well as they could. But there is definitely a problem, and they saw this problem before. So why didn't, the Federal Reserve should have weighed, is the fight in inflation worth the risk of crushing the banking system, in my opinion. That, so basically what happened with SVB is their hot money fled. They couldn't, not all of it, but a lot of it, like 50 billion. And they therefore sold a bunch of their bonds at a loss, a $1.8 billion loss. When they reported that in their financial sheet, the hot money, the rest of it left. And that's what caused the panic. Obviously, they had to close the window, as you would say, that you couldn't pull your money out anymore. And the federal government decided to step in. Now, again, we could argue these people with the hot money should not have gotten their money because they were not insured. They didn't pay for that protection. They took the risk. However, the government made the decision, and
this is another example of too big to fail?
In a sense, yeah. It's too big to cause a panic, which is what we're talking about here. And because that's what happened with First Republic. First Republic was not as bad. It wasn't like 94% hot money. It was like 65% or something. It was still bad. And they had $100 billion pulled out of their bank in like 2 weeks' time because people got nervous. Well, even though they weren't as bad, they were bad enough. The government loaned them $84 billion to try to save them. But the point was, hot money just kept leaving because, again, it didn't want to take the risk. Is what happened? Will I ever get my money back? So basically, what happened here is that our system is, I was a bank director. our bank at the time was a small local bank, that we made sure we balanced. That was one of the discussions we always had with the management. You balance your deposit, age of your deposit, the length of them, whether 1, 2, 3, 4, 5 years or whatever, CDs, it could go up to, I guess, 7, and your loans, they must balance.
Right.
So therefore, if you have something, the one will follow the other. That is a basic rule of banking. I gather it's not the law. It should be, very frankly. Or the regulators should very heavily have some muscle to enforce that. That is what we should have done, is said, fine, you must balance the two.
Okay. Well, let's move from the international and national banking scene to what is the status of the dollar as the world's reserve currency. Would you please tell us what the Chinese have already done to dethrone the dollar and replace it with their own currency? What steps will the Chinese be taking in the near future, and how can American investors protect themselves?
Well, basically, the Chinese have already started, let's say, the process. They have formed a group called BRIC, B-R-I-C-S.
And that
which stands for Brazil, Russia, India, China, and South Africa, which are economically larger than the G7 by a small amount, but they are larger, and they're growing faster, primarily because of China. Now, what I find interesting in this group is that India, our so-called relative partner, which they're not. India, under their founding Nehru and so on, Nehru primarily, they believed in the 5-year plan just like Russia. They are today buying Russian oil, helping to bail out Russia. They are not, which is a problem. So we're talking about the two by far largest countries in the world, each 1.4 billion people, are obviously conspiring to bring down the dollar. This is a challenge. And basically we have a president that also wants to help them do it, it appears. That basically it appears the elite of America want to make everybody dependent on the government, and even if the country is a lot weaker, they'll still be super powerful.
Or at least as inept and are not capable of dealing with it. So basically what has been happening is more and more countries, well, now the latest, of course, is Saudi Arabia. Because of where Trump had a good relationship with Saudi Arabia, Biden has a terrible relationship, and they have now, there's a thing called a petrodollar. Right.
And at this point, there's a question whether it's not going to become the petro-yuan, because Saudi Arabia has now become very friendly with China. If they join this, that could be a major, major blow to the dollar.
So that meant that anybody that was going to buy petroleum had to pay in dollars.
That's correct.
Now it'll be anyone who wants to buy petroleum will have to pay.
Well, they haven't really said that yet. It's just that at this point they're having a lot more conversations. They're visiting each other. They're doing things, and basically, when Biden has asked them to do this or that, they have told him to drop dead.
Okay. Well, on that, let's take a break here. We'll be right back with Behind the Headlines. Stay tuned.
Behind the Headlines is brought to you as a public service by the Pennsylvania State Association of Township Supervisors, the largest, most influential municipal association in the Commonwealth. Since 1921, PSATS has been preserving and strengthening township government and securing greater visibility and involvement for townships in the state and federal political arenas. Covering 95% of Pennsylvania's land mass, townships represent 5.5 million residents, more than any other type of political subdivision in Pennsylvania. Additional underwriting provided by the Worrell Corporation Foundation, based in Carlisle, Pennsylvania, by the Edward H. and Jeannie Arnold Foundation, and by the Pennsylvania Manufacturers Association. Business in Pennsylvania is our business. Behind the Headlines is also supported as a public service by the Pennsylvania Highway Information Association, the go-to source to learn about transportation projects and issues. Visit pahighwayinfo.org.
Welcome back to Behind the Headlines. We are focusing on the Arnold Report with Mr. Ed Arnold, who is the president of the and chair of the Susquehanna Valley Center. And we were right in the middle of talking about the dollar as the world reserve currency, and you were about to tell us what the American investors could do to protect themselves.
Unfortunately, there are very few options. Basically, you want something that is not dollar related. And the only thing that really is not dollar related is gold and silver. And silver is an industrial metal more so, but gold is a store of value. We know there's a limited supply, the government can't manipulate it, and it's a world, it's been for thousands of years the world's currency. So basically, let's put it this way, there are many different ways you can buy it, but to have it physically in your hand, I personally like junk silver. Junk silver, for your information, is from, I think it was 1987. The government used to have silver in our quarters and dimes. That's when they stopped. They put now lead in whatever, no value. So really at this point, junk silver, you could melt that down and it's worth way more as the metal than it is the quarter or the dime it's worth. And it would be very good for transaction trade, whereas if you have a gold coin, today it's worth over $2,000. Well, it'd be a little difficult to buy a loaf of bread for $2,000. You know, things are inflation. So basically, therefore, to have those two, it shouldn't be your whole portfolio, but it should be part of it. And actually right now, the other thing, which we'll talk about in a second here then, is short-term government treasuries, because it's very liquid. But that we'll talk about shortly.
All right. Well, the next viewer would like to know, what is the size of our national debt at present? Are we ever going to be able to pay it? And is it fair to burden future generations with our debt? How can we wake up the public to this big problem?
Well, unfortunately, the problem is so big that that's probably why we don't want to, let's say, address it. Just to put it in perspective, the facts. There presently, we are what I call the general debt, is the best way to put it because the government doesn't use regular accounting, is $31.5 trillion. And of course, they're talking about increasing it if the government can get together by $1.5 trillion more to make it $33 trillion. Now, that is what I call the headline debt. What we don't talk about is all the unfunded commitments. Our military pensions, most of our government pensions, are either not funded at all or funded very little, and that's trillions of dollars. There seems to be a debate exactly how much. I've seen numbers from 10 trillion to 100 trillion. All these commitments our government has made that eventually they're going to have to pay. So really, the answer is, can we ever repay our debt? No, in my opinion. What all the Republicans right now are fighting about is not to increase it so rapidly.
Right. This
year, we're going to have a 1.4 trillion at least debt increase because that's our budget's unbalanced. At the rate, the prediction is now by the budget office, one of the few things in our government that seems to be not totally political. They seem to actually try to tell the truth, which is something ironic to especially our governing people right now. But it's going to be $2 trillion a year to the indefinite future. That is very, very dangerous. Back to our thing, the dollar. That is destroying and eroding the value of the dollar because we used to be back to 2008, 40 to 50% of our debt compared to GDP. We're now at 120%. So therefore, this number of the size of our debt is growing exponentially. So right now, what are the solutions? Right now, the Republican solution to this debt negotiation is right now that we should slow government spending, not balance the budget, just not make the deficit so large.
Right.
That's going to be painful because the Green New Deal says we don't care about, it makes no sense because we don't care about how the rest of the world doesn't address global warming. We've got to address it.
And what is the administration's solution?
Well, the administration solution is kick the can down the road, ignore the problem, kick the can down the road. And very frankly, the average American, I'm not so sure, is that gun-ho on really addressing it because to really address it, we would have to cut spending, which means some money wouldn't come from the government. But number two, or increase taxes substantially. So basically, we have a very serious problem. We should try to modify, which is why I think the Republican stand is pretty intelligent. We know we can't drastically change things, but let's slow them down.
Okay, Ed. Well, the next question from one of our viewers is, what effect is the war in Ukraine having on America's economy? What effect will it have in the long run?
Ukraine basically is let's say, has a no solution situation, but it's not very, it's, what it still comes back to, which our previous discussion, more debt, more debt, more debt. Because all the money we're pouring into Ukraine, we're borrowing. So it's just aggravating our debt structure. And what's even worse, when there is eventually peace in Ukraine, and let's be optimistic and say that they will stop, and I would hope they would, then we're going to rebuild it. And of course, we will pay for it. It'll be a new giant Marshall Plan. Well, there's two problems about that. Number one, it will cost way more to rebuild the country than the military did. So we're talking about probably, instead of spending 150 billion, which I think we're now almost got up to in Ukraine, we're going to be 5, 6, 7, maybe $1 trillion we're going to pour into that country. There's two reasons why. Number one, it is an extremely corrupt country. On the scale, somebody's scale, but it's a relative thing. We are ranked like number 23 in corruption in our country. They're ranked 122. Russia's only 130. This is out of 180. It is a very bad, so it's obviously when you have corruption, it costs more to do things. And of course, you've got to have the Biden's got to get 5 or 10% off the top.
Well, we found out that right now it appears that only 1/3 of all the money that the United States sends to Ukraine ends up at the front. 2/3 ends up somewhere else, and we don't know quite where yet, but behind the scenes, 2/3 of the money is there.
Well, this is exactly what I'm saying. You got a very corrupt
front.
country, and it's not going to change. So therefore, the cost to rebuild Ukraine is going to be brutal, and this is going to weaken us because more debt, more debt, more debt.
Mm-hmm. Okay. This next viewer wants to know whether or not they should buy an electric car. They're anxious because it does not appear as if there are enough recharging stations to take long trips or to leave their immediate neighborhood. Should they hold on to, they want to know if they should hold on to their internal combustion engine car.
Basically, I guess I could say I've got good news and bad news. The good news is, according to actually Tesla's announcement, that China, unfortunately, has developed a, I'm trying to find the word here, it's a lithium-ion iron battery. I'm probably getting those words slightly wrong, but what it is, it does not use cobalt, it does not use nickel. It has a lot of advantages, this new battery. It's lower priced to make. It's faster charging. Of course, it's more stable because it won't go on fire because of the way it's constructed. It's easy to recycle, but its life is also 4 to 5 times longer than the present lithium battery. So unfortunately, 95% of these batteries are made in China. And presently China, which is a very large manufacturer of electric cars, that's what they're putting in all their cars now. That's why Tesla is talking about that he is going to come out with a lower price car and put this battery in. Now the biggest negative of this battery is it definitely has a shorter lifespan, a shorter charge period, so you have to charge more often. So that's one of its negatives. Again, we're more and more dependent on China. Electric cars are always dependent on China because they control the world's supply of cobalt. Basically, they are heavily involved with refining the lithium. Right now, America has tremendous lithium reserves. Unfortunately, they all seem to be in graveyards of Indians because supposedly 80–90% of our lithium, the Indians object to us getting to it. Right now, specifically, there's a battle in Nevada again.
Under the jurisdiction of different First Nations. Okay.
Well, that's Canada's First Nations, but anyway, yes. So basically, at this particular moment, the good news is, if you say you want to buy an electric car, my answer is wait. I do think eventually, yes, we're going to have more and more electric cars. I think right now, I think the technology is still, because the technology is the battery. Okay. And battery technology is not, this new battery is a sign of goodness. There's other things that are happening in the battery industry around the world, but mostly in America, but they're in the development stage.
So there you heard it. Wait to invest in that. This question I wanted to ask you earlier, we are down to 3 minutes left in our show. In the past, you did not like bonds as an investment. This viewer has been watching you. Have the markets changed? I'm now reading that bonds are an attractive investment again. Is that true?
I
How long
agree.
will this be true
Obviously,
for?
what has happened is because the rates have changed drastically. You would have lost money if you had held your long-term bonds. Well, that's what we talked about. The banks are hurting because they bought long-term bonds. I agree. This right now, as an example, the 1 to 6 month treasuries are from 5.6 to 5.06%, over 5%. Obviously, 1 year they're about 4.7, 2 year on up, 3.9 to 3.7, up to 30 years. So basically, there's a big break after 1 year. My statement is, if you want to, I think, yes, you should buy U.S. Treasuries, but buy short. Maximum 2 years, preferably maximum 1 year. It's very hard to find how you buy them, very frankly, because there is not a lot of ETFs. I could find
What is ETFs?
Exchange Traded Fund.
Okay.
That's where it's lumped together.
ETF.
It's a low cost, very, very low cost to administer. But they have 3-month iShares, which are an ETF. There also is a company that has, it's a symbol BIL for the under 3-month treasuries, OBIL for 1 year, and WTBO for 2 years. So I had trouble finding a lot of options in ETFs to buy treasuries. You might want to check with your broker or your financial advisor, but basically I agree, because of the yield, especially of the shorter term around 5% or up in that area, it is an excellent investment right now. In these uncertain times, you should be liquid, and the return is better than potentially the stock market.
Okay. In the last 30 seconds we have left, I think you could tackle this last question. Why is there a drive within Congress to eliminate all AM radios from new cars? What sense does that make? This viewer writes, most of the information that I look to the radio, most of the information that I look for comes from the radio.
Basically, to me, it's all back to this program we talked about earlier. Is the government wants to control, control, control. AM radio is simple, it's efficient, it is basically pretty much a communication rather of the conservatives' radio talk shows. So basically the government wants to get rid of it because it wants to cut off the communications to the people.
Well, that's a provocative and interesting development, isn't it, Ed?
Yes.
Well, we want to thank you and for being with us again this month. We want to thank all of you for being with us to look at the state of international and national finances and the economy. And again, we welcome your questions here to Mr. Arnold. And we hope that you'll join us again for the next Arnold Report next month on Behind the Headlines. We'll see you then.